Why I think rates are about to come down, and I've been saying now imminently, I'm going to give a good argument why I think rates are imminent to come down here in the US, and I'll explain why and the information that I've got to draw that conclusion with some latest information from Canada and the European Central Bank. So tap the like button and please do consider subscribing to my channel. Let me give you the information. First of all, so everyone is fully clear of where we are. We are in a massive bull market. There's no doubt about that. If I share with you the fear index, however, this will just show you how well the markets are doing, but the fear index is in fear. We're heading towards neutral, but we're not actually heading towards neutral. We've dropped from neutral into fear. So it's very interesting that we are such in so much bull activity at the moment, and yet we're in fear. Imagine when we turn the other way, how it's going to explode. Let me explain a few things that I mean. First of all, my portfolio started with $5,000 and we are now at $90,298. 315 all-time highs. I don't short stock. I don't do options. I just long-term invest. And as I spoke, there it is. I said it was going to turn neutral, and it did. It literally did it during the show as I spoke about it. How about that? I literally predicted that. That's pretty cool. I can't make that happen, by the way. That just happened, which is very, very good. We are turning neutral. We are going to move into extreme green. Now, that worked out brilliantly. I can't believe that happened like that. Right. Let me explain to you why I believe 100% and why I've been saying now for nearly 2 years that rates will come down in the summer. I absolutely believe it 100%. I've got no doubt about it whatsoever, because what I've been doing now for nearly 3 years, I go live 12 hours a day, and I'm constantly listening to you, looking at what you're saying, looking at what you're doing, running polls, reading news, following everything I can, and I'm noticing patterns everywhere. I'm building up a huge amount of data and information on the way people are. It's all about people. Everything is to do with people. People are greedy. People are selfish. People overbuy. People oversell. People manipulate. How many times I got caught out with information I got from CNBC, watching Bloomberg, when one person would tell me to do something and then it did the exact opposite. I've seen it time and time again, and I've started to see patterns and data forming everywhere. So looking at the numbers, listening to FOMC reports, covering all the earnings, I've seen patterns, and I've been writing it all down, taking notes, and taking it all in. And I stood by my statement that the rates would come down in the summer. I was probably the first person ever to say it 2 years ago, and I stand by it. I still believe rates will come down. It's imminent. It could happen tomorrow. It could happen today. First of all, you need to be clear. The FOMC reports and the statements do not have to occur for rate cuts to come down. Jerome Powell said time and time again that he can drop rates whenever he wants to, and they can come down at any moment. If they over tighten, they can bring things that they can always drop the rates quickly. Now then, over the last couple of 24 hours, we have seen Canada reduce rates. We've now seen the European Commission, the European Central Bank bring down rates. Now, traditionally, historically, the Fed are always the first to do this. They might feel a little bit maybe embarrassed that they've not led the world. They've not led the world for the first time. And the reason for that is the Fed are using out-of-date lagging numbers. Their systems, the people that work at the Fed are very old, and they are using very old technology. They're using very old figures, and that they really shouldn't be, because the data that they're going off is past tense. We know now that inflation is coming down. We know there's lots of data to suggest actually we are deflationary. Things are much better than they actually are if you look backwards, as the Fed is right now. The European Central Bank realized that. Canada realized that. And I think America, the Fed, is going to notice it imminently and realize actually we've been tightening for too long. Now then, What does it mean if we bring the rates down? Does it mean that we're going to continue to bring rates down and it's going to come down and down and down? No. And it wouldn't be right. It wouldn't be right for Jerome Powell to suddenly reduce 0.25% today, 0.25% tomorrow, 0.25% next week and keep on going. That would be irresponsible and would end up with a Paul Volcker. Everything would turn around and go straight back up again. He's being responsible, but he's tightening too much. He's being too careful because we've got an election year coming up. And he wants to get this job done before the election, and he wants this to be his legacy. But right now, he's trying too hard and doing too much for too long. If we look what happened today, only just today, a few hours ago, the ECB, which is the European Central Bank, lowered the three key interest rates by 25 basis points, in line with expectations. They were expecting to do this. It was 98% expected, and they did, marking a shift from 9 months of stable rates after inflation declined by more than 2.5%. That's a huge amount, by 2.5% since September. That's not a small amount. Now, we may actually be at 2% inflation right now if the Fed were using the forward-looking figures like they are in Europe and like they are in Canada, but they're not. They're using an out-of-date system. All right, the main refinancing operations rate was lowered to 4.2%, 4.25%. The deposit facility rate of 3.75 and the marginal lending rate to 4.5. However, domestic price pressures remained elevated, indicating continued inflationary challenges. To address the council aims to keep the policy rates sufficiently restrictive, maintaining a data-dependent approach. The latest Eurosystem staff projections for both headline and core inflation have been revised up for 2024 and 2025. Staff now see headline inflation averaging 2.5% in 24 and 2.2 in 2025 and 1.9 in 2026. Okay, so there we go. We can see now that the European sector and Canada feel that rates, that inflation is coming down a lot quicker than it is being reported to in the United States. Now, what does all this mean? I am going to say again, rates will come down in the summer. I believe it, and I believe it's imminent, if not tomorrow. We got some big news coming out tomorrow, which I think will give Jerome Powell a way out of this mess. He does need to bring rates down. It's not as attractive right now in the US to invest. So why are we green? Why are we super green? This is really, really important, and I doubt if many of you watched to the end of the video because, you know, it's boring information, if you like, but it's really, really important. I am only in the S&P, and I am beating the market at the moment, as you can see, because I've got $28,000 worth of margin. So when it goes up, it exaggerates the up. When it goes down, it exaggerates the down. So I'm beating the market right now. The reason, there are a few things to say here. First of all, mega caps and tech is outperforming the market at the moment, and that's a huge part of the S&P. Now, some of you have said, why don't I go to a more tech-heavy ETF? That would be irresponsible because it's not going to run forever like this with Nvidia and all the other high-tech stocks. You need a balanced approach. That's why I remain in the S&P. I remain in VU, which is what I use. I'm not going to go to a more tech-heavy position because I think that would be unbalanced, because right now we are overbought in that sector. But here's the thing. Here's why the markets are up despite we haven't got rate cuts. And what are rate cuts going to do for the market? Well, the fact of the matter is the stocks that are driving the market up at the moment, the majority are the mega caps, which are great businesses, which have tons of cash on the side, earning tons of money at the highest rates. They don't need rates to come down. In fact, their competitive edge is increased by rates being up. It doesn't bother Amazon. It doesn't bother Apple. It doesn't bother Microsoft. It doesn't bother Nvidia. All of these companies actually don't mind rates being up. They couldn't care less. And when they come down, and they will imminently, it will go down by 0.25%. It will make no difference to those businesses whatsoever. Where rate cuts matters is for the small caps. The small caps, the companies that have got huge amounts of debt, no cash sitting around, and are struggling. For those, it'll benefit. And that's why I want to remain in VU, the standard S&P ETF, because there are smaller companies there that have masses of potential, unleashed potential that yet is to occur. They will benefit from the rates coming down. The mega caps aren't going to benefit from the rates coming down because they're holding huge amounts of cash. And all it actually does is gives them a more and more competitive advantage because one, they're making extra cash, and two, their competitors are disappearing and they're buying them up. They're swallowing up the competition. The old saying, the rich get richer and the poor get poorer. So for me, it's absolutely right to remain in the S&P exactly where I am. I'm not going anywhere. In fact, I'm bullish, extremely bullish. In fact, I'm not fearful at all, unlike that index I just shared with you. I am $28,000 in margin. I'm beating the market. I expect an 8% left in the markets this year, and I'm paying 6.25% to borrow money, which I anticipate being paid off within 6 months. So in reality, I didn't pay 6.25%. I paid about 3 to make 8, so I net 5. Makes perfect sense, right? I'm not buying on the way up. I bought on the way down when we had all the nonsense with Donald Trump crashed the market when all that news came out about the court case, and then we had all the nonsense about Third World War was going to start, and we were told the Third World War would start in 48 hours and America would cease to exist. Meet Kevin was trying to sell life insurance. Graham Stepan was doing fire and brimstone, and the world's coming to an end. All of that is rubbish. All of that is nonsense designed to get you to vote on their video and watch their video. This video, however, is from a much smaller channel. It's much more boring news, but it's the facts about it. So here is the facts. Rates will come down. They absolutely are going to come down this summer. Today, tomorrow, I don't care when, they're coming down, and the market knows it. What will it do for the market? Absolutely sod all. It's already priced in. It's already going to go up because the mega caps don't care if it goes down 0.25%. They're already making money. They're going to continue making money. But what will happen, the smaller companies that have a smaller part to play in the S&P will start to rise because for them, it'll help them. So my portfolio will rise about 8% this year. It won't be a huge rally, but 8%. And bearing in mind, I've got margin, so it'll probably be more like 10% because I'll beat the market along the way. I am very happy. Thank you very much. So mark this day. I've been saying for nearly 2 years, rates will come down in the summer of 2024. Because if you spend 3 years going live, 12 hours a day, listening to everything, hearing everything, looking at all the polls, seeing how people are manipulating the market, how they're overbuying, how they're overselling, how we've got a meme craze, all of this, the way the Fed works, covering the earnings, covering the FOMC reports, you start to pick up a little bit of a pattern. So I've noticed it. It's not popular. It's not going to get everyone to watch my videos. It's not going to get everyone to subscribe. But quite honestly, I couldn't care less. As long as I do the right thing and tell you the right information that my viewers and my members make money, that's all I care about. So there you go. Click above my head for martynlucas.com and all the links on the all links page, including Alpha Spread, all the software that I use to obtain all this information. You'll see my X account. Go and vote on my polls so I can learn more from what you really think. Down below in the description, I'll also post my X account, all my links, martynlucas.com, and other videos I think you'll find useful. And over here, I'll put my Alpha Spread and other videos and playlists that I think you'll find useful. Until next time, as always, take care of yourselves and each other.